Well, good morning, everyone. Welcome to our Friday morning trading room. Hang on a second here. We'll get the screen share up and running. So yesterday's long-awaited tax announcement put an initial damper on the market. We saw the market pretty much in a downtrend out of the open, and then going into the afternoon session, the market took it all back into the close and then some through the overnight. So we're left with a rather substantial opening gap. We finished yesterday around the 62.40 mark, opening this morning around 62.65. With an opening gap like that, I'm always thinking the market may try to reverse the overnight trend, which it does have a tendency to do. If you open up your charts and you see a very clear overnight trend, the market will have a tendency to try to maybe not necessarily fill the gap, but certainly try to reverse the trend very often out of the open or shortly after the open. Scott's asking, what did you say came out yesterday? Well, there was a big deal about some new corporate tax structure, and everybody was expecting it to be very favorable for business. A lot of people are saying the anticipation of that is what kept the stock market rallying to new highs, and, well, I guess yesterday was just more of the same. Anthony's got two upside targets here, 62.75, 62.99 3/4. Imagine that, the NASDAQ trading at 6,300. That would be something. Anthony also mentions, I'm totally looking for a reverse in the NASDAQ at 62.75 if we're not going for the high. Kind of that whole test-retest scenario. So far, out of the open anyways, we've got a pretty neutral falcon, actually giving us a late filter entry right on the opening bell. And that seems to have fallen off nicely. We did have a pre-market late filter entry, printing around the same area as we had the trend change signal as well. So a good start for the falcon. The hawk also fairly bearish to start. So we had pre-market, quite a few sell signals, and then here we had a first micro-macro cross about a minute into the session. And some of you hawk traders are looking at that and you're saying, wait a minute, Eric, how is that a first micro-macro cross signal? This guy right here. Didn't the micro lines and macro lines cross way back here? Isn't this the first micro-macro cross signal? Well, yes, it is. However, you need to remember what the first micro-macro cross is actually showing you. It's showing you a market that is all out of sync. It's all a jumbled mess, and then it comes into sync, and this is the first signal that prints where everything is in sync. So here, the trend lines are out of sync, the bar colors are out of sync, the filter is out of sync, even though it's only out of sync for one bar. That's all it takes. And then everything comes back into sync and produces a sell signal. So we have red trend lines, red bars, red filter, and of course a red signal. That is also a first micro-macro cross. As you know, a very high probability signal on the hawk. The eagle has come back here now into the hard edge. Whenever we encounter the hard edge, we should anticipate a reaction. I don't know, I find it hard to believe that that's the only reaction we're going to get coming into the hard edge. It looks like we're a little bit delayed as price is coming down here, making a little bit of a double bottom with the overnight low, or at least the European session low. Pardon me. The Raptor, what time is it? Oh, we're only about 6-7 minutes into the day. The Raptor coming along now with the trend change signal. That's the number one cloud crossover. We do have a chance at a second push entry on that signal. You know, you're going to look at trying to risk it above the high of the morning. The ideal stop, the overnight high. It's a little bit of a tough trade to take, but maybe we can get by with a slightly tighter entry since we're doing a second push. Like I said, still very early in the morning. And I think a move here to the primary support would be reasonable. Down here to the secondary support at 62.26 3/4, well, that will effectively fill the overnight gap. Maybe a little bit on the ambitious side. It's a little bit early for me. Usually I like to let the market settle in a little bit, but again, you know, trading is a very personal business. I know some of you have no trouble taking trades right out of the open, and you do very well with it. You would have done okay today as well. Here was a counter trend signal. Looks like about a minute before the open here on the Raptor. And then, of course, we have our signals that I pointed out on the Falcon and the Hawk as well. I see there's a couple new names in the room. Welcome, everyone. If you have any questions, please don't be shy about asking. We're looking at here is the NASDAQ market. I'm also following gold and the euro dollar. But please don't be shy about requesting a market if there's something you would like to see, or if there's something that's not clear, please ask away. A lot of times on these early trades, I will try to stretch it out to see if I can't catch some early momentum, but today maybe I won't press my luck. Maybe I'll just take what the market's going to give me. Okay, I'm getting a little nervous about the trade. We're waffling a little bit there, so I'm going to force the trade to break even now. All right, took the break even stop out. we'll see in a moment whether that was a good idea or not. Mauricio is asking, hello, I'd like to know if you explain also the E-mini in the classroom. Well, I most certainly can. A lot of times I'll stay with the NASDAQ. It's kind of my favorite market. I think the NASDAQ, while not as popular as the E-mini, offers more opportunities in that it's only $5 a tick versus the $12.50 a tick on the E-mini. Now I'm going to show you something here on the E-mini that a lot of people don't know. A lot of people say, well, let's trade the E-mini because we can make more money. After all, it's $12.50 a tick, right? Well, yes and no. Just one second here. Okay, so here now the E-mini S&P on the Raptor. When you're trading the E-mini, you're going to need to probably use the default, or the, not the default settings, but the alternate settings that we have for the Raptor. I'll explain those in a moment. The thing is, when you open up your E-mini chart, well, hold on a second here, rather than try to explain it, let me actually show it to you. Yeah, Anthony likes the S&P better at $12.50 a tick, but let me show you something here. Okay, so when you first open up your Raptor and you have the default settings on the E-mini, it's going to look something like, well, it will look like this. What do you notice first of all? Well, the daybreak lines are all very close together, aren't they? There are not a lot of trading opportunities here. Not unless you're glued to your computer screen 24 hours a day. Now, you can see the signals still work out very well, and you could certainly trade this end of day. You know, you could take like your number 3 position and just ignore the market for a day and place a profit order somewhere, and you'd have no trouble finding it. Same thing with the counter trend signals. These actually developed during the day. Those would have been tradable signals. But you don't get a lot of signals, is what I'm trying to say. If you open up a chart and you see the daybreak lines this close together, this tells you that you should probably try the alternate settings. All right, what are the alternate settings? Well, the alternate settings for the Raptor are 4, 4, 6. We're going to go to a 4-tick brick, and we're going to adjust our cloud sizes to accommodate the faster brick. So first you're going to go to your data series, and you're going to change your brick size to 4. Then you're going to go here to your indicators. And don't worry, I'll go over this again if you can't keep up. And you're going to go down here about halfway into your settings, and you're going to change your cloud sizes. So you're going to change one of your clouds to 4, the other cloud to 6, and you go to change your hawk brick size to 4. 4, 4, and 6. Easy way for you to remember that is the telephone prefix in Moose Jaw, Saskatchewan. See? Now you'll never forget it. All right, once you've done that, your chart should look very much like a normal, I'm using air quotes, a normal Raptor chart. And you'll notice your day break lines are a little bit more expanded, and you actually get some trade signals here that you can do. For the most part, the E-mini, once it settles into a direction, it tends to have pretty decent follow through to it. You're not going to get as many opportunities, however. You're probably going to end up waiting a little bit between trades, and that's fine. After all, we're not here for a lot of trades. Rather, we want to get a high probability signal that we can put some money on. Okay? Now, here's the thing that a lot of people don't realize about the E-mini versus the NASDAQ. They think, oh, I'll trade the E-mini, it's $12.50 a tick, I will make more money. They think if the NASDAQ moves, say, 20 ticks, well, that's only $5. If the E-mini moves 20 ticks, well, at $12.50 a tick, I've made twice as much money, right? 2.5 times as much money. Okay, but here's the deal. The E-mini and the NASDAQ have a tendency to move an equivalent dollar amount, not an equivalent tick amount. And most people don't know this because they've never checked it. All right, let's take a look at this little swing here. We'll price the E-mini first. We're going to look at this little swing from down here to up here. On the E-mini, this move is worth $550. Let's see what that move is worth on the NASDAQ. You can see the NASDAQ's got a lot more volatility going than the E-mini. All right, I think it was this one here, from here to here. So we're going to go from the low down here to the high up here. Okay, drum roll, please. Look at that. Okay, it's not exactly dollar for dollar, but it's pretty darn close, right? You've got, we're going to call it $500 profit. We've got $500 profit in the NASDAQ. We've got $500 profit in the E-mini, right? It's the same amount, essentially. So you say, okay, well, what's the big deal then? It's the same amount. Here's the big deal. The E-mini at $12.50 a tick is, I can take 2 contracts in the NASDAQ for every single contract I can afford to take in the E-mini. I can afford to greater capitalization in the NASDAQ than I can in the E-mini. So let's take a look at this example again. Now from a trading point of view, let's say we're going to look at doing a reverse. We're going to trade the reverse from here. We're going to cover right there. Okay, in the NASDAQ, or pardon me, in the E-mini, I can take 1 contract. We're going to do this trade. From here to here, we're going to trade that first swing up to there. It's going to cost me $212. I can take a single contract. Now on the NASDAQ, where'd you go, NASDAQ? here's that same swing. We're going to try the same thing. Oh, darn it. Okay, bad example. I'll have to change the example. The risk amount is the same in this case. Let's adjust the trade a little, just so I can illustrate my point. Let's say we're going to capture this swing here. So we're going to go enter here. We're going to cover below the low of that swing, and we're going to go up here. What? All right. I've got to be right on the cusp. The point I'm trying to make is that very often you're going to be able to trade more contracts with the with the NASDAQ. Okay, not today. Just the way this one is falling. There, okay. For illustration purposes, here we go. I can trade two contracts with the NASDAQ on that swing versus just a single contract. And sorry, I hit the wrong button. Just a single contract with the E-mini. Right? The E-mini, I can afford one contract. With the NASDAQ, I can afford two. The point is that this is still an amount I can afford, but I've also maximized my profitability. Now, all right, in this example, the profits are pretty darn close to each other. A lot of times, wait a minute, that's not all in, all out, is it? No, that's why. Sorry, one more time. I forgot to adjust this. Okay, that's better. I can afford to take two contracts. This is still an amount I can afford, but I've maximized my earnings. By actually trading the cheaper instrument, by trading the $5 NASDAQ versus the 1250 E-mini, I've made another $200, approximately. We're just rounding now. All right, so I would have made 340 in the E-mini, and I made 560 in the NASDAQ. So I can actually earn more in the NASDAQ. And this is what a lot of people miss. Everybody gravitates toward the E-mini because they say, oh, at 1250 a tick, I'll make more money. But they never actually check it out to see that they move the same dollar amounts. So if the E-mini moves $500, the NASDAQ will move $500. The added benefit of having two contracts to trade in the NASDAQ versus the one in the E-mini is it makes your trade management a little bit easier. Let's say you're in this trade and you're starting to rack up some profit and you've got like $250 in open profit. Well, you have options. You can lock in part of the profit. There, we get a reverse bar. You can lock in part of your profit. You can take profit on one, leave another trade at break even and hope maybe you can get extra profit. With the E-mini, you don't have those kinds of luxuries. It's always, especially if you can only afford to trade one contract. If you can only afford to trade one contract, it's like, okay, what do I do? Do I take profit? Do I roll stops? Do I bring stops to break even and hope for the best? What do I do? You don't have as many options trading the more expensive E-mini. Now, Anthony makes an excellent point here about margins, and you're going to have to check with your broker as to your margins, your day trade margins. If your margins, Anthony's right, your margins on the E-mini and the NASDAQ are both the same, but honestly, Anthony, your margins seem a little bit high. You should be able to get day trading margins from your broker, but again, it depends on your account size. But that's a discussion for your broker. Normally, they'll give you discounted margins for day trading positions, which will make it a little bit easier for you to take 2 NASDAQ contracts versus 1 E-mini contract. But that's why I tend to gravitate toward the NASDAQ versus the E-mini. But I would be happy to show you the E-mini as often as you like. In fact, what I'll do is I will save the E-mini now. We'll have it there instead of the euro. All right, coming back here now. Oh, it looks like I chickened out of my trade. It did get down here to the primary support zone after that little bit of a hiccup. Gave a couple more little bounces, and we might be getting a little bit more bullish. Marizo's asking, I use the NinjaTrader 8 and the kinetic data feed. Do you forecast an upgrade at the version of the Raptor? No. Quite honestly, and don't tell anybody I told you so, but software companies, like everybody else, you know, like the fashion industry, like the car industry, they make changes to their software to encourage you to buy more stuff, right? Hey, this is new. Look at new and improved. Buy now. But wait, there's more, right? And on it goes. The DTS system came out, I guess, about 5-6 years ago now, and we haven't changed a single thing on it. The programming is exactly the same. Everything works exactly the same. The Raptor, the only change that's been made on the Raptor have been the signal prompts. And those are just to help you identify the high probability signal opportunities. The programming itself, there won't be any changes. If there are any changes made to the Raptor, it's very likely going to be cosmetic, or if we figure out a way to actually program in the double pullback, there may be an upgrade for that. But for the most part, no, there's no changes. Ninja 8, I will warn you, there is still a little bit of a software glitch between Ninja 8 and the Trade Manager. The programmers hope to have it resolved by the end of the year, but Ninja 8 really doesn't offer any benefits for the DTS system. So I've been a little slow to upgrade to Ninja 8. Now don't panic if you have Ninja 8. Just be aware that there's a little bit of a bug occasionally with the Trade Manager and Ninja 8. I don't even know what the bug is. I'm just told that there is a bug. As many of you will have heard me say before, I'm notoriously slow for changing operating systems. I only beta test if they want me to break something. I'm good at breaking things. I suppose that's why Adam always gives me new software to test. Here, Eric, play with this. Tell me where the problems are. All right, a little bit of a decline and a pullback now, back to the hard edge of the trading cloud. The trading cloud, not an Ichimoku cloud. I know it looks like one. I suppose in many ways it works similar to an Ichimoku cloud, but we won't get into that right now. The cloud giving us our directional bias. We did get a number 2 signal here printing after the number 3 signal. These tend to be the reversal signals that have a little bit more impact. Just a little note to self. It's not that you can't take a full-on counter-trend signal, but when it's developing within a trend like this, it's not as reliable. It seems that once we get that hard edge bounce, if it fails at that point, then we're very likely to see a reverse back to the hard edge. A great question from Herbert here. And you know what, folks? If there is an upgrade to the Raptor, this is probably going to be it in response to Herbert's question. Herbert's asking, is there a way to fully automatically trade the Raptor, or is something in the planning? So what Herbert is asking for is what is essentially called a black box trading system, where you hook your computer up, your trading platform, to your account, and you just sit back and you watch it trade. Honestly, we've toyed with that idea for a lot of years now, and we've played with it, and we haven't come up with something we like yet. I don't know, there's just, maybe I'm too old, but the notion of turning over your money to a fully automated account is a little bit scary. Or for me anyway. But I still have an iPhone 3. So, technophobe? No, not me. At the moment, Herbert, nothing definitive on the horizon. Like I said, we've toyed with the idea for about 5-6 years now, and we've made stabs at it, but we haven't been happy with the results. I suppose because, you know, I've mentioned this before as well, but as traders, oh, here, I'll do it on this chart. As traders, so many times I get people coming to me and they'll say, you know, hey Eric, how would you trade this? Well, I don't know, because I can't see any context in the chart, right? You can't make a trading decision on the last 3, 4, 5, 6 bars that you see. To me, that's impossible. To me, you have to have some sort of context available. Your trading decision is not just based on the last bars or the last signals, but everything that preceded it. The left side of the chart is as important, sometimes maybe even more important, than what's going on right here, right now. Oh, I see. Herbert says, I'm thinking of order execution more faster and more accurate. That's a very interesting idea, and that is something that I will make mention. The Raptor with actually the new Trade Manager, that was an upgrade to the Trade Manager. The Trade Manager hadn't been upgraded for a long time, but that has been an upgrade to the Trade Manager where you can just punch into a trade. Here, we'll have our stops automated, and we'll go, let's see, with the, no, it's still on the wrong side. Okay, here, we'll go with the chandelier strategy for now. Stops are down here. If I have my stops enabled and I hit the buy button, and I have my profit target enabled, I will automatically get my profit order. I will automatically get my stop loss, assuming my stops are enabled, as per my stops strategy. And that's a one-click entry system. That's about as fast as we can make it right now. This trade may actually work out. Look at that. Wow. All right, so we do have that. But yeah, I know what you're talking about, Herbert. You always, yeah, Herbert says sometimes you do not get to the train in a fast-moving market. So I know, Herbert, you know, if you got to go set your profit target, set your stops, you may not actually get the trade on. But like I say, if you have a stop enabled and you hit your buy or sell market buttons, that will default to your profit order, and that will get you into a trade pretty quick. So we're getting a very early cloud crossover here now on the Raptor. Anything else looking bullish? Oh, we got a bullish hawk. We got a first micro macro cross there, and we're working a trend change signal here on the Falcon also. All right, hold on a second here, folks. All right, Frank mentioning the mini Dow, that's the YM. The mini Dow tends to trend very well also. And here right out of the open, we had a very nice counter trend signal. So we had, of course, before you have a counter trend signal, you have to have something with trend. So we've obviously got an uptrend. The band, trading band, getting nice and broad, which tends to happen toward the end of a trend as well. And then we come back with the multiple retests of the high and a sell signal. So yeah, a very solid move lower there in the mini Dow. Mini Dow actually looking a little bit bullish right now, getting a little bit of an early cloud crossover. A little bit of a jumbled mess here at the moment. Ooh, the sell-off continues. It's funny, I was looking at this and I was going to, I didn't want to confuse you, but I was going to say that you could consider this a hard edge bounce. Remember, whenever the market gets into the hard edge of the trading band, we're looking for a reaction. It doesn't always mean we're going to get a big reaction, but we're looking for a reaction. And I was going to point out that you could interpret this as a number 3 signal. It didn't print as a number 3 signal because the clouds were starting to cross, but it did hit the hard edge, and this is the reaction from that encounter, and a pretty good follow through on that, actually. We're in a full-on bear market right now. Well, full-on bear market makes it sound more of a bear market than it is. Yes, Marlene, good eye. Marlene also catching that number 2 signal after the number 3 signal. So something to keep in mind. If you see a number 3 signal, which is a continuation signal, if you see that print and all of a sudden it starts to struggle and comes back with a number 2 signal, then you should be thinking, that might be a good opportunity. Okay, Rod is looking at the Falcon long signal. Okay. All right, so I think this is the signal here that Rod is looking at, and he says, I took that buy signal and I put my stops where you suggested, which would have been below the low here. We're going to assume you put it right there. He said the trade just backed up on me. You know, did I do something wrong? Well, technically, no. You didn't do anything incorrect other than what do we see coming into that buy signal? All right, we've got a pretty decent downtrend going on here. For me personally, I have I have a tendency to try to, I'll favor one side of the market, the side that seems to be paying off. So on a day like today, the market does seem to be a little bit more bearish, doesn't it? It seems to be paying off to the short side. So then we come along here and now we produce a buy signal. Is this one of our high probability signals? Well, yes, it is, as a matter of fact. The trend change signal tends to be a high probability signal in that it will very often reach the high probability profit target. But given the context of the day, you need to be a little bit more leery on it. You know, if we're only looking to take 2 or 3, maybe 4 trades a day, when you get a signal, in the back of your mind, you should be saying, is this one of those high probability opportunities? If you think it is, then yes, by all means, go ahead, take the trade. I think it would have been a more successful trade, Rod, had the market come down here and then come up and we produced a trend change signal. You know, even actually back here at the same level. Because now I've got a really well-defined retest of the low. Right now I can say, oh, it looks like the buyers are trying to buy the market up. Ooh, I got a trend change signal. Maybe I should try it. I'll still risk it back here, and it may still tank because of the, you know, the overall bias does seem to be down for the day. But this has a little bit more structure. Now, I know you're going to be looking at this and you're going to be saying, well, what's the difference between here and here? I had multiple tests or a retest of the low. And you're right. You know, I wish I could explain it better. But like I said, I do have a tendency to stay with one side of the market, the side that seems to be paying off, even if it means missing out on a trade. So let's say I didn't take this and the market goes up anyhow, hits its high probability target. Well then, okay, I'll make a note in my trade journal. Maybe I was a little bit too conservative. Maybe in the future I'll try those types of trades. But I'm pretty much a chicken when it comes to trading. You know, I really want the best scenario before I hop on board. And now we're about an hour in, so the market, if there has been a defined trend, the market will tend to bottom out, you know, around the 10:30 Eastern, 7:30 Pacific mark. So maybe this will turn out to be a broader bottom, but I still haven't seen a suitable test of the extreme and evidence that the buyers are actually really interested in buying. Excuse me, either by making a lower high, or pardon me, a higher low, or by actually violating that swing high and holding on to the breakout. hope that makes some sense. Unfortunately, you will never ever have all the pieces to the trading puzzle when you take your trade. It's always going to be a best guess type scenario. Okay, you guys are full of questions here this morning. Bear with me a moment while I get to everybody's. Oh, Anthony's looking for the rally to 6,300 now. you got some room to move there, Anthony. And you know, the daily bias is up. Like, I can see your reasons for trying that buy, Rod. Because the overall trend is up. It was worth an attempt, but that's why, you know, at the same time we use the risk manager component of the trade manager, so that when we do get into a trade like this and it does tank, at least the risk amount has been something that's affordable. You're going to run into problems not so much when you risk this amount, but when you start, you know, risking 7, 8, 10% of your trading capital. Those are the times you can't afford to be wrong all that often. Okay, Herbert says that was an example in the YM, no chance to get into the market. You should have the possibility to arm the Raptor if the input conditions are met. Yes, you should. The Raptor prompts are here to alert you to trade opportunities, what classify as high probability trades, but at the same time, once you know how the trades are set up, you should try to anticipate them. So what I mean by that? Well, we know the cloud crossover signal develops when the clouds start to cross over. That's the #1 signal. Right? So as soon as your clouds begin crossing, whether they're fully crossed or not, you should start to look for a cloud crossover signal. There's two components to the #1 signal, the cloud crossover signal. We're going to have the first component, the clouds are crossing. The second component is the market will pull back into the clouds, and then the clouds will support the new direction. Those are the two components. Clouds crossing, pullback, new direction. So then, when I get the warning dot and the audio alert saying that there is a selling opportunity here, and then I print the triangle and the hash mark, well, at the very least, that should give me the opportunity to prepare to short and just hit the sell button. If the market's moving really fast, I can do that. Otherwise, if the market seems to be lumbering a little bit like it is here, I can take a moment and I can set up my trade. Then, if the market does continue lower and it does develop into a full signal, then you're ready for it. The counter trend signal, the #2 signal. So you've got a market that is obviously trending. That's component #1 of the counter trend signal. You have to have a trend. Component #2, you have to see a retest. And ideally, the band will be a little bit broad as well. So if I have a trending market and I see a retest, and now all of a sudden I get a warning dot and an audio alert saying there's a sell opportunity, I'm thinking, maybe that will be a counter trend trade. Maybe it will go back to the hard edge. All right, and if it does develop, if it does go lower and develop into the signal, I will get the signal prompt as well. If we are already in a trend, we're in a trend and the market encounters the hard edge of the trading band, I'm going to anticipate a reaction. When I get my warning dot and audio alert saying that there's a buying opportunity off of the hard edge, I'm going to look at that and I'm going to consider that as a hard edge bounce, which is the number 3 signal. So when that signal prints, I've anticipated it. So the prompts are there to help you, but it also helps if you, I guess, if you're alert to how the market is unfolding. So I hope that makes sense. And you know what, to be fair, there's going to be times, and you guys see this in the room all the time, there's going to be times that the market is just moving too fast, and you go, you're trying to set up your signal, and you go here and you go here, or as is my case, sometimes I'll go here and I'll try to put the stop up here, and trade managers will say, oh, no, sorry, Eric, you can't do that. So then I got to start over, and in the meantime, the market's already, moving along without me. It happens. There's almost always another opportunity to get in. The only time the market will really go screaming past your entry opportunity is when you end up trapping traders, as we did with that Dow example. But even then, you should be able to just reach for the buy and sell buttons and get into a trade that way. Maurizio is asking, can you please explain the philosophy, not the formula, of the indicators? I'd like to understand the tools I use, how they work. And he says, I'm new here, sorry for my basic questions. No, don't worry about it. That's why we have the trading room, so you can ask these kinds of questions. There's a lot of programming going on behind the scenes in each of the tools. There's half a dozen parameters for each tool that have to be met before you even print a warning dot. The programming on the Hawk Scalper is designed to pick up short-term shifts in price and momentum. It's not just a momentum-based system. It actually analyzes price, and it looks at specific price setups before it prints a signal. The Falcon and the Raptor both have more or less the same engine driving them. The Falcon and Raptor signals are designed to try to pick up midterm price swings. So they look for a little bit more structure in the trade. They look for a few more things to come into sync that would suggest the market is going to make at least a moderate move higher or lower. And then you have the Eagle, which is swinging for the fences all the time. The Eagle is looking for those larger moves to develop, and it will tend to print a signal when those parameters have been met. Today, you can see it's been a long, slow grind to the bottom. Now we definitely have something resembling a little bit more of a bottom formation. And we have a rule of 3 to the upside as well. So the eagle definitely getting a little bit more bullish here. The rule of three, we haven't addressed this very often because we've been dealing with the raptor a lot, but the rule of three signal on the eagle is a counter trend signal. And with all counter trend signals, you don't have to trade them. Rather, you can use them as an early warning that perhaps your trend is changing direction. But here we have a bearish band, and we're starting to produce buy signals on the other side of the band. Typically, after the third signal, if the market is committed to the change, it's going to actually have some giddy up go. But as with all counter trend signals, along with requiring a trend, you also need to have a test of the extreme. Without the test of the extreme, it gets really difficult to tell whether there's going to be enough push in the new direction. Well, here we have had a test of the extreme. This looks like a retest of the low. And it looks as though the buyers may be trying to push the market higher from here. So we'll see. That could be a rule of three signal. Obviously, the trend on the morning still very down. Strong move out of the open, but we are starting to flatten out. It's actually a little bit more of a pennant, isn't it? We got a little bit of a move there. We got a little bit of a move here. Very sideways type formation, consolidating. Steve, I don't know if you got my reply. I replied to your earlier post. Oh, there we go. I got your reply right there. Well, we're kind of stuck in the sideways pattern now, which again is not that unusual for a Friday. Oh, sorry about that. Thanks, Marlene. What I was saying is we got a cloud crossover signal here, and you know, the market unfolded really quickly, and you might be saying, oh no, the market's running away on me. Well, what you could always do is you could take advantage of that second push opportunity, right? You could wait for the market to react. Here, I can do it again, actually. You can wait for the market to react, and then you can say, okay, I'll set up my entry here, and I'll look to get in it on some renewed momentum. Yes, you've given up a few ticks here on the entry, but the market hasn't really left the station without you, so to speak. Alternatively, what you can do is you can always hit your buy and sell market buttons. In this case, the buy market button. All right, so that's one alternative. But again, there will be times where the market just kind of explodes past you and you're going to get stuck on your hands. And yes, I know it's annoying. Welcome to the world of trading. There you go. Come on, let's go. Okay, Herbert's asking, when I press the price button to place an order and hit execute, I cannot move the entry and target before execution. Is that normal? Yes, it is. And the reason it is that way is because the trade manager needs to make risk calculations. So let's say we're looking at this trade here, and you're looking at doing it like this, and you hit submit, it will say order pending. Well, if you decide now to change your order from here, you want to move it up here, that's going to change your risk amount, isn't it? And that's going to mess up your risk amount relative to your risk percentage mode. So yes, you cannot change that once you have an order placed that way. The only order that you are able to change on the fly is if you right-click and you place your order, because this order is live. It says order pending, but it is a live order as soon as you put it on your chart. So that means you can pull it and you can move it, you can do whatever. Now, I'm going to show you something here. If I have a stop enabled, let's make this a little bit more generous so I have some time to talk to you about it. If I have a stop enabled and I bring my order down like this now, if I have a stop enabled and I bring my order down, okay, and I get filled, notice the trade manager automatically gives me a stop as per my stop strategy, so long as it's enabled. You will get your auto break-even trigger, however, it will not place a profit order for you. But that is one way that you can enter a trade and have the flexibility of adjusting your entries. If you do happen to get into a trade this way and you need a profit order, simply right-click on your chart and place your profit order accordingly. A lot of these things you will figure out for yourselves just by playing with it. You know, go into sim mode, take 15 minutes and just play with your tools, your toys. You know, see what happens when you hit buy market, sell market. See what happens when you hit the panic exit. See what happens when you change the risk amount. See what happens when you're in a trade and you change stop strategies. You know, see what happens when you're in a trade and you change stop strategies and then you change stop parameters. You'll answer a lot of your questions just by taking a few minutes and playing with the tools. Herb's asking, I know, yes, but it could be a recalculation. Yes, I suppose it could. I'll tell you one thing, we are pushing the limits of NinjaTrader programming with the Trade Manager as is. The reason, in case you don't know this, the reason Indicator Warehouse offers these tools on NinjaTrader versus something like MetaTrader or TradeStation is the NinjaTrader programming is actually the most, I'm going to call it robust, in the trading realm. We have yet to figure out how to make something like Trade Manager work on TradeStation or on MetaTrader or one of those other platforms. Their software just can't handle it. And yeah, we're pretty much taxing the limits of NinjaTrader with Trade Manager just the way it is right here, right now. Short of going and buying your own supercomputer so that we can upgrade the software for you, you may have to make do for a little while longer. But it's a cool feature, and there's never any harm in asking. As I always say, send your request to Adam, because he's the one who can make these kinds of things happen. Maybe not right away, but believe me, he keeps notes of all your requests. And if there's a way to make it work, he will make it work. Okay, the buyers certainly struggling after their initial breakout, and we're kind of losing our grip on the market. I may just give it this bar here to come around. And let's see, do we have open profit in anywhere else? No. So maybe I'll go with something like the bar high-low. See, there's a reason we give you all these different stop strategies. So you can find the one that seems to be working best on the day. But we really have a little bit of a bearish slant on the day today. I'll roll that one up as well. And I suppose I should do the same thing here on the Eagle. Market's starting to fold over to the short side again. We saw a breakout here, right? We saw a little bit of a breakout. I would anticipate a little bit of follow through on the breakout, not exactly a reversal immediately after the breakout. You know, when you take the context into consideration, though, I would say we've kind of hit a sideways skid here. And we'll see, maybe I was too aggressive with my exit order. These are things that you will learn by doing. All right, I don't know if we're going to get another trade here this morning. Might just wrap it up here for now. Looks like a lot of traders kind of stepping away from the market. As we continue to have this sideways drift. All right, gang, why don't we button up shop here a little bit early this morning? I've got to meet with Adam shortly, and have yourselves a wonderful weekend, and I will see you on Monday. We'll talk to you then. Bye for now.